Oil's up, gold's down. Hi, I'm Joe Doe, reporting from Wall Street for your commodities update on this Friday. West Texas Intermediate crude was trading higher during a choppy Friday session. Headline durable goods orders looked pretty strong for September, but when discounting transportation came in much weaker than expected, University of Michigan consumer sentiment also came in below expectations. Both of these reports suggest an impending economic slowdown, but oil's fluctuation around the flat line shows traders are still assessing the news. COMEX gold for December delivery is decreasing as traders are taking profits ahead of the weekend. Gold has climbed to nearly 2.5% for the week. But precious metals markets will likely pause ahead of the Federal Reserve's policy announcement due next Wednesday. Here to talk to me today on what to expect is Andrew Chanin. He's the co-founder of PureFunds. Andrew, and thanks so much for being with us.
Thanks for having me, Joe.
So, Andrew, we saw earlier this week an analyst at Societe Generale came out and warned that we may be not expecting what could actually happen for the Fed in one of these upcoming meetings, which is an increase of QE. First of all, do you think that's possible?
I think pretty much anything is possible at this current moment. We've seen different independent forecasters project that is a possibility that QE could actually be increased. But this is a milestone announcement that a major bank is finally seeing that not only is possibly taper off the table for the short, immediate, maybe even long term, but that QE could actually be increased.
Interesting. Now, when do you think we might actually get QE?
QE, well,
a taper, excuse me. Give us more. No, a taper.
Sure.
Yeah.
So I think that taper is currently off the table. I think that there are still different institutions and economists that are predicting a taper. But right now, we haven't really seen that great of a growth trend start to actually take hold.
Yeah.
And until we do, it doesn't make sense that the Fed policy would actually change. And if anything, it does seem that there might be more institutions that come out and decide that an increase in QE would be the next appropriate measure for the Fed to take.
Your expertise really is more on the silver space, but not less so on gold. So when you talk about gold and silver together, do you think then that the possibility of very long term until we get tapering is or is not priced in?
I don't think, I do think that the taper has actually been priced in. This is the first announcement that taper might not only be off the table, but that an increase in quantitative easing could take place. And when quantitative easing was put on the table initially, that's what caused the major run up in gold to the 1900 levels and silver to the $49 level. And it wasn't until talks of that coming off the table and that run-up having been mainly on the margin side that we saw a change in that and a drop in the price. Now that we haven't started really seeing momentum calling for possibly more QE, I don't believe that the upside has been priced in, but the downside has.
Interesting. So you think there might still be a little bit of upside to go?
Certainly. I think that that's a very possible trend, and being that it isn't a widely held view of that being a possibility yet, I think that there's much more room actually on the upside of it possible.
Well, Andrew, we'll keep an eye on it. Obviously, this is a difficult one to measure, as it seems like people are becoming less and less convinced that tapering is as close as we thought it was last month. Thanks so much.
Thanks for having me.
That's all we have for today. For The Street, have a great weekend. I'm Joe Doe.